What is Joe Biden's wealth tax plan and how would it work? America's billionaires have seen their collected wealth surge 70% since the start of the pandemic to over 5 trillion. That gain from March 18, 2020 to the past month is equal to the size of Biden's spending plans over 10 years. To help pay for his big economic and social agenda, President Joe Biden is looking to go where the big money is billionaires. Biden never endorsed an outright wealth tax when campaigning last year, but his more conventional proposed rate hikes on the income of large corporations and the wealthiest Americans have hit a roadblock. That leaves a special tax on the assets, not the income of billionaires being proposed by a Senate Democrat as a possible vehicle to help pay for child care, universal pre kindergarten, child tax credits, family leave, and environmental initiatives. Biden has vowed that his programs will not add a penny to the deficit, which means selling to Congress and voters a tax of the wealthiest 0.0005% of Americans. Some details of the proposed billionaires tax. Wealth tax, how would it work? Essentially, billionaires earn the bulk of their money off their wealth. This might be from the stock market, it could include once sold beachfront mansions or the ownership of rare art and antiquities, a Triceratops skeleton. This new tax would apply solely to people with at least 1 billion in assets or 100 million in income for 3 straight years. These standards mean that just 700 taxpayers would face the additional tax on increase to their wealth, according to a description obtained by the Associated Press of the proposal of Senate Finance Committee Chairman Ron Wyden of Oregon. On tradable items such as stocks, billionaires would still pay a tax even if they held on to the asset. They would be taxed on any increase in value and take deduction on losses. Under current law, those assets get taxed only when they are sold. Billionaires would also face an additional tax on non tradable assets such as real estate and business interest once those assets are sold. During the first year of the proposed tax, billionaires would also owe taxes on any built in gains that predate the tax. How much money would it raise? House Speaker Nancy Pelosi estimated Sunday on CNN that the tax would raise 200 billion to 250 billion. This is a meaningful sum, but it's well shy of the nearly 2 trillion in proposed additional spending over 10 years being negotiated right now. This means that additional levies such as the global minimum tax and increased enforcement dollars for the IRS would still be needed to help close the gap, and the forecast for revenue from the wealth tax are highly debatable. It is just impossible to implement, said Alison Skager, a senior fellow at the conservative Manhattan Institute. There's a lot of evidence that these things don't work, and I have never heard an explanation of how this could be workable. Why would Biden go this route? The president would rather raise the corporate tax rates and rates on wealthy individuals. That was his initial proposal, but he's got to appease West Virginia Sen, Joe Manchin, and Arizona Sen Christian Sinema. Those are the two make or break Democratic votes in the evenly split Senate. Sinema objected to higher rates, which brought the wealth tax into play as an alternative. The idea gained steam after the publication of French economist Thomas Piketty's book Capital in the 21st Century. Massachusetts St. Elizabeth Warren made a 2% wealth tax a trademark policy in the 2020 Democratic presidential primaries, and fellow candidate Bernie Sanders, the senator from Vermont, proposed his own wealth. Biden never jumped on the bandwagon, but he did make higher taxes on the wealthy a key promise, with saying no one earning less than 4 lakh dollars would pay more. Are billionaires really that rich? Seems that way. There is a legitimate debate about the optimal forms of taxation. It is better for the economy for the wealthy to keep their assets invested in new business. Or is it better for some of their money to go to the government to help fund programs like child care, universal PK, and shift to renewable energy? What is clear is that wealthy do not have money to tax. Should the government wish to do it? America's billionaires have seen their collected wealth surge 70% since the start of the pandemic to over 5 trillion. According to an analysis by the Pro Wealth Tax Americans for Tax Fairness and the Institute for Policy Studies program on inequality, that gains from March 18 to 2020 to this past month is equal in size to Biden's spending plans over 10 years. Right now, billionaires are not paying a dime in taxes on their fabulous income gains from the stock holdings during the pandemic, said Frank Clemente, executive director of Americans for Tax Fairness. The billionaires' income tax would tax the income increase in value of these assets each year, just like workers' wages are taxed. There are 614 US billionaires at the start of the pandemic, a total that has now grown to 745. Part of what makes the coronavirus unique is that many poorer Americans also became wealthier, but they did so at much slower pace than billionaires. Federal Reserve data indicate that the net worth of the bottom 90% of the Americans, a group that includes the middle class, rose by roughly 22%. For many Americans, the wealth increase reflected a rising stock market, higher home values, and unprecedented government aid in the form of direct checks and forgivable payroll loans to small businesses. Can billionaires escape taxation? They have found ways before. They can hire armadas of lawyers, accountants, and others to minimize the tax burden. The news outlet ProPublica revealed various tax shelters with IRS data earlier this year, and the recent Pandora Papers showed there is a global industry to shelter the assets of the politically powerful and extremely wealthy. The ProPublica investigation showed that Warren Buffett paid an average rate of 19%, Amazon founder Jeff Bezos paid 23%, while Tesla's Elon Musk was at roughly 30%. The top tax rate on income earned from labor is 37%, but the tax on capital gain is lower 20%, and that favor those with extreme wealth. The lower capital gain rate can also encourage more investment in new companies that help the economy grow. A White House analyst in September indicated the country's 400 wealthiest families paid an average federal income tax rate of 8.2% between 2010 and 2018. The administration's fundamental message is that a rate this low is unfair because middle class families often pay a greater share of their income in taxes. The bottom line question for Democratic lawmakers is how to close or at least narrow or escape hatches for those with extreme wealth. It could require calculations such as deferral recapture amount and other technicalities that are likely to baffle most of America. But the writing of the tax law and its enforcement will determine just how successful a wealth tax would be and perhaps the fate of Biden's big agenda as well. Thank you.